Welcome to Global One Media Stocks to Watch. I'm Michael Suido. I'm speaking today with John Feneck. He's a commodities analyst and the head of the Feneck Consulting Group. John, welcome back. Great to see you again.
Likewise, Michael. Thanks for having me.
The first half of the year is practically over, and the U.S. markets have done surprisingly well, despite the lack of any interest rate cuts by the U.S. Federal Reserve. The Fed's key lending rate remains at 5.25% to 5.5%. Tech stocks have been by far the best performers. Despite some recent profit taking in NVIDIA, the Nasdaq is still up more than 15% since the beginning of the year. Look at the U.S. economy. It is growing strong. Some say it's cooling off a bit. There are signs of that, but there are also no signs of a recession, and prices are rising more slowly than before. So, John, I want to ask you, as we look ahead to the second half of the year, what's on your radar? What's your outlook?
That's a great question, and it's going to be a long answer, but I feel like if you look at one of the things you mentioned there about a recession, that's been talked about now for 3 years, back and forth post-COVID, right? And we dialed back our recession call last May. So what is that? 13 months ago, because we saw tech, NVIDIA, AI doing so well and really showing leadership. We didn't go long tech, as I've said on your show before, because I always want to be transparent. But we're a commodities manager, so we don't really go long other sectors. A lot of times, we'll go short some other sectors because we see some of the sectors are getting really overvalued. I think some of them right now are getting a little stretched. We're obviously at an all-time high at the on the S&P as we speak. So whenever you're at an all-time highs, you have to be careful, and you're seeing that if you're an NVIDIA shareholder right now, right? You don't know where the top is on anything, so you have to be careful when you're at all-time highs on anything. So why not look at a sector like commodities, which has been in a bear market for so many years, right? Like, we're the unloved sector, and I love the underdog in general, and I love a sector that's completely misunderstood, right? When people are driving around in their Teslas, they don't understand that the companies that I buy are making up the battery in their car, right? Like, I mean, that's the reality of it. And yet people really just want to poo-poo the whole commodities, theme without really understanding what it takes to get, these metals out of the ground. It's really a grueling process. Therefore, anytime you're in a special situation like that, you have to have an expert like myself guide you through what is going to happen as things unfold. We've been talking on Kitco and other shows about this theme of China really dominating the commodities market. I was just on Kitco show this month in June and talked about the fact that Morgan Stanley, for the first time that I've seen in years, wrote an article in April about this very theme, about China's dominance in commodities, and highlighted a few, microcap stocks, which really surprised me. Just showing people that the lead that they have in the commodities race is so large that it's going to be difficult for North America to catch up.
It's really interesting. I mean, when we see most of the market sector, most analysts focusing on tech stocks, like you said, that's not really your area. Commodities are, but more and more people gravitating towards that. I mean, particularly as we see critical minerals, as you pointed out, dominated by China, North America trying to beef up its supply chains of that. And if we look at commodities, well, I mean, prices for quite a few of them have been rising this year, from coffee to copper. They were up sharply in the first part of the year. Silver investors, who I know you deal with a lot of them, they're looking at profits of more than 20% since January. Yet we've talked about how mining stocks in general have been lagging behind. I look at one of the big ones, Barrick Gold. It is in the red. Smaller exploration companies have done even worse. So I'm curious, in your view, are we finally going to see a long-awaited rally in these lagging stocks?
Yes, but it'll be a rifle approach. And so, Barrick has underperformed. Newmont, for that matter, the largest holding in GDX, has underperformed. But I don't worry about the producers at all. I think if you look at the top three in GDX, which, by the way, is the largest ETF in the mining space, it's over 15 billion in assets. You look at Newmont, Agnico Eagle, AEM, and Barrick, GOLD. All three of those represent about a third of the ETF almost. So you really want to look at that as an investor to see how these companies are doing. It's going to drive behavior in GDX. And if you look at their January earnings as well as their April earnings, they were all of those companies outperformed and beat analyst expectations pretty well. I think this quarter in July is going to be much better because you've had a gold price that's hovered around 2,300 now for many weeks. So that's something that the average investor needs to understand as well, is that the all-in sustaining cost per ounce, which is known as AISC, on these companies is anywhere from say 1,250 to 1,400 an ounce on average, and yet gold is at 2,300. So you're making hand over fist money, and you will continue to make that money as a producer, right? That's the difference, Michael, between producers and, like you said, explorers. Is that a gold explorer is just exploring for the metal right now. They're not realizing those gains, right? Because they're not selling gold bars to anyone. They're trying to find these deposits and hopefully get taken out by a major or go ahead and build it themselves. We talked on your show before, June 7th, with a couple of these type of stocks, and I'll mention them again because I think, people could, maybe you can put a link to the June 7th, event that you hosted here for people to check out. But it was three gold stocks, Nev Gold, which is NAUFF, First Nordic, which is FNMCF, and Golden Caribou, which is GCCFF, all led by people that have had success in the business before. Brandon at Nev Gold actually worked at a major, so he understands what a major is looking for, right? That's important. Taj at First Nordic ran Discovery Silver, which is one of the largest silver systems in North America, in Mexico. And he was responsible for that stock's ascent under his direction. And then you have Frank Callahan at Golden Caribou, who ran the Caribou mine, which is now part of Osisko Development (ODV), which is only about 70 kilometers from his current project. So he was really in a good position to rebuild his team 10 years after that transaction, which he sold, by the way, for 330 million Canadian. And now, Golden Caribou is kind of hitting the reset button with virtually the same team in a hot gold market. So these are the kind of things that you look for as an investor, where people have had success before, or worked at majors like Brandon has. Like, they have more experience perhaps than the average exploration company out there. So they're not all created equal.
A note to viewers, if you want to take a look at that panel discussion that John is talking about, we had a live discussion, a live webinar, several hundred people attending. It's available online right now. Just look for Investor TV, which is investor-television.com. John, we're going to take a closer look at commodities in just a moment, but first I got a curveball for you. When you're not looking at stocks, I understand you're a professional musician. So I'm wondering, if you had to pick one song to describe the markets right now, what would it be?
Okay. Well, whatever song title you could pick for Euphoric and Greedy. So that's I'm sure there's some pop song out there talking about that.
Money, money, money.
Yeah, there you go.
All right, well, let's take a closer look at gold now. The precious metal enjoyed a strong rally from October 2022 up until around April of this year. As you mentioned, it's been a bit stuck, you might say. Gold prices have been hovering around 2,300 US dollars an ounce. So, I think everyone wants to know what's next. Is this just a hiatus? Do you think gold prices will continue higher, or is it possible they have peaked?
Well, I would suggest people take a look not at a near-term chart of gold, but a 15 to 20-year chart of gold, and it looks very constructive, quite beautiful, in fact. It's making what we call a series of higher lows. And so this area here, Michael, don't forget, just in January, we broke through major resistance on gold, which was that 2060 to 2100 an ounce range. And it hasn't looked back. To not retest 2100 here is amazing to me. That's just I follow gold. This is what I do for a living. And I'm just amazed that it hasn't retraced. Look at silver. So silver broke through 30, which was major resistance, and retraced immediately, right? And as we record this, we're under 30. So commodities naturally are going to make a move up and then consolidate, and then hopefully make a second leg higher up, make a higher high. And I think that's what gold is setting up to do right now, hovering at 2,300. You're very much in sight of the all-time high, which was achieved just a few weeks ago, over 2,400, but not yet at 2,500. So when 2,500, which is sort of like a magic large number, round number for people, is broken with some authority, I think you're going to get, a lot of people buying anything with the word gold in it. And if you don't believe me, go take a look at 2020's behavior, right? People were listening to podcasts that I would record or Eric Sprott would record, and just gaming our stocks and just piling into stocks without even looking at the name really deeply, which is a mistake, by the way. I mean, you have to do your due diligence on stocks and make sure that this is an investment that's going to be appropriate for you. But I think like right now we're 41% in gold or gold stocks. I mean, in our portfolio, we're heavily overweight because we think that this is the time not, I mean, time not to really go buy gold hand over fist, in my opinion. I want to be buying gold stocks hand over fist because there's going to be so much leverage there. So, we've already talked about a few that we recorded on June 7th. Some other ones that I've been looking at, I just got off the phone with Dakota Gold, DC.
Mm.
These guys are listed on the New York Stock Exchange. They got gamed last week because if you remember, GDX and GDXJ rebalanced on June 21st. This is a phenomenon that happens every quarter, and it's disruptive to stocks, and it's a buying opportunity if you can mark your calendars 4 times a year and understand that this is something that will move stocks up or down. Even a tiny little adjustment in these ETFs, because they have so much money, will make a difference in a lightly traded stock, right? So Dakota was trading fine, and then all of a sudden, like an hour before the close, it just dipped like 5% out of nowhere. And in talking to the CEO, it was just the rebalance, and so the stock rebounded just yesterday, like nothing happened. So if you're trading, that's a trading opportunity. We just look at it as a longer term buying opportunity. The stock was around 230 a share when we got into it. It ran up to 324, and now it's retraced all the way back to 235. So when you see that retracement, you want to be able to put buy orders out to where you used to buy it, right? Like we always have two buy orders out on everything, Michael. One is where we would have a dream fill, like at 230 on this one, and then we would buy closer to the bid ask, that of that day if we really want to get filled on something. So we encourage people to not put huge orders out there in one shot or two shots. We buy 6 to 10 times over time. We bought Dakota 5 times already this year. So we have a good blended cost that is intelligently built. And just to finish the thought, I mean, I think when you look at the US, it's not created equal, right? Alaska's got problems. California has had problems in the past. I think South Dakota is a great jurisdiction. I mean, they're on private land here. They have 2.3 million ounces of gold already identified, and they're going to grow that resource to 3 million plus, I think, by December or January.
All right, I think viewers are definitely going to replay that part of our conversation, look at the transcript, got some great insights there. Really interesting about buying the stocks at multiple points of time to get that great price, and also the retracement. Really, really interesting. Let's turn back to silver now. Like gold, the current silver rally started around October of 2022. Unlike gold, though, if you look at the charts, it doesn't really look like silver has peaked, even if it is trading a bit off of its recent highs. So, John, what is your take on it? How are you playing the move in silver?
So silver has been something I've been buying since year 2000, because silver coins are much more accessible to the public in terms of price. So I was buying silver at $8 to $10 an ounce back in the early 2000s, I guess. And I sold all of my silver, in fact, in 2012 or so at around 35 to 40 an ounce. I didn't catch the top at 50, but we rebuilt that position quite nicely, as silver faded since the highs of 12 or so years ago. And now it's our largest holding. So we like it because silver is still a precious metal. Everyone puts it in the industrial camp only, and it's a mistake. When you have a black swan event or something that isn't expected, such as I think the news, June 14th of Russia adopting the Chinese currency is pretty interesting stuff. And I'm surprised that gold and silver haven't made more of a move on that news. But I will say that both gold and silver have held up, right? So like, even though the dollar is moving higher, they have held their ground since that news was released. I think you're seeing what the beginning of a currency war here. I mean, I think we're already in one personally, but you're seeing lines being drawn between one part of the world and U.S. and its allies, and this is going to be really played out. I think investors should watch the BRICS meeting October 22nd through the 24th to get more color on this. But getting back to your question on silver, so I mean we're bulls, right? I mean silver has confirmed gold's breakout. silver could not get through 26 an ounce last year to save its life. And this year it broke through like it was nothing was there. So that's what you look for when you get behind a commodity is some level that they couldn't break through before, like gold not being able to break through that 2060 kind of level, right? And then it went through with authority here in quarter 1. So silver's on its way. It's a frustrating commodity for sure. But if this pulls back to 26 again, I'd be all over it. And I think it's going to go to 33 to 35 this year easily, without much help from the news flow. It's really poised to make a nice move.
All right, so we've talked gold, we've talked silver. What else is in your portfolio? What else are you looking at?
So we look at special situations all the time. And by that, I mean, coming from a background, our portfolio and our newsletter, Michael, doesn't just talk about gold and silver. We cover all commodities. So I think that's giving us a unique perspective that can help clients, in something like critical minerals, right, that are on the U.S. critical minerals list. Just today, Golden Metal, which just renamed itself the Guardian Metal, GMTLF, came out with news that they discovered probably what looks like a new porphyry system in Nevada. So great jurisdiction. That's great. But they also have this tungsten business that is not getting a lot of attention from the market, which is a mistake because 91% of tungsten last year was produced by China. 0% of the world's tungsten was produced in the US. Here's a company that is in the US, publicly traded, and it barely does any volume. It's very frustrating to see. However, the stock has moved from 15 cents to 30 cents here in just a very short period of time, 6 months. So I think when you look at stocks like that, Michael, you have to say, what happens if this stock gets analyst coverage? What happens if this stock gets DoD money, Department of Defense money? That's a very real possibility with a stock like this because the U.S. realizes it's behind the 8 ball. They're not quick to move, right? And that's frustrating to investors. They want an immediate gratification like you get in tech seemingly every week. But that's not how commodities work. You've got to get certain things accomplished, and then you wish you would have had some stocks like that because they move real fast. There's a nice, tight share structure on this. Management owns a good chunk of stock, and we really like that one. We also like First Tellurium, which I've mentioned with your viewers before, which again is Tellurium 2 years ago. I didn't even follow. This is what I do for a living, and I didn't follow it because again, there's not publicly traded companies that focus on this. A lot of them are private or they're overseas. So 65% of the world's production in tellurium is Chinese. So not 91%. However, still 2/3 of the world's production coming from a source that is not an ally of the US. And here we have a company that has a Canadian deposit and a deposit in the US in Colorado. But they also have this thing called a thermoelectric device, which makes them sort of a pseudo tech company. They put out a news release 2 weeks ago that said they're partnering with this company called Resolve, which I didn't know. You can't, I follow 200 stocks as it is. It's hard to know everything about everything out there. But in doing more research and looking at their press release this morning, Resolve actually has partnerships and does business with Apple, Tiffany, some very large companies. So I think the 29 million US that they just offered First Tellurium over 3 years is really interesting because now Resolve is a real entity and they're going to be able to pay that money to a small junior, right? When First Tellurium got this deal, the market cap on that stock was under 6 million US. So to get a $29 million check over 3 years is kind of a big deal. And that's what I was talking about earlier, right? Now you've got analysts that I'm sure are calling the company, wanting to cover it. That's going to bring in, a few thousand more eyes from their viewers and their book, right? They're going to raise money probably at some point because now they have this good news behind them. And if they actually start drilling and doing some damage in those two projects that they have, I think investors will be, very happy that they bought something like this. The CEO owns about 12% of the float. So the public float is only about 100 million shares.
So to recap, that's First Tellurium, and they're doing a deal with Resolve, and both of those are publicly listed.
I'm not sure about Resolve. I'd have to check on that, but it's in the press release today. So if investors go to firsttellurium.com and just read the June press release, they'll see a little bit more about Resolve.
All right, great. You mentioned what you do for a living. You've been an equity analyst for more than 30 years. You invest your own capital in companies that you believe are undervalued with a focus on the mining sector. You started this consulting firm 5 years ago. You put out mining commodities reports. You personalize calls with subscribers. So just briefly, if I'm looking for insight, you have a number of different services. How do I decide which one is right for me?
Sure. So there's three different services primarily. One is the newsletter. We built the newsletter 3 years ago, Michael, to kind of just compete with everyone else. It's not my favorite thing because newsletters are flawed in general. Because if I write my newsletter, say July 1st, and something happens July 3rd, you're not going to get another issue for a number of days, right? And so you really don't know what we think. And that's true of most newsletters that are weekly or bi-monthly. However, I think there's something there for entry level investors, to where they can start seeing the kind of macro outlook we have and some of the picks that we are talking about. We have a section in there called In Focus, which talks about, every time I interview a CEO at conferences like PDAC or Beaver Creek, where there's, 25 CEO meetings we'll have in 3 days. We'll take maybe 7 or 8 of those and break them down in a paragraph for each of the investors that can't go to a conference like that, which I think is a valuable piece of information for a very low entry point. That's like $65 a month. And then we have what we call real-time updates, which are emails that we send out based on not a daily basis, Michael, because things don't happen every single day, in my view, that are moving markets in commodities, at least. So we talk about non-farm payrolls. We talk about GDP, which is happening this week. We're going to talk about non-farm payrolls on July 5th, I think it is, whatever that Friday is. And we talk to investors about how that relates to the commodity market. So when non-farm payrolls printed in June, we immediately said 1 minute after the release that this was going to be a really rough day for gold and silver, because the headline number was about 90,000 jobs higher than the estimate, right? And anytime you get a headline beat like that, it's usually like 9 times out of 10 a bad day for gold and silver. So these are little things that investors can get by using our real-time service. They can really give them a leg up if they're actively trading or at their computer a lot, et cetera. And lastly, we have the calls. They get to talk to me directly about anything they want. So we don't provide buy, sell, hold information anymore, because I gave up my licenses 3 or 4 years ago. But what I do is kind of walk them through news releases. They can be extremely difficult for people to understand, right? Most people are not geologists by trade, including myself. So you have to kind of say, how is this news release relevant to the company's, next 3, 6, 12 months? And we can do that on the phone with them.
All right, awesome. Well, thank you for walking us through what you do. I think people find that really interesting. And thanks as well for sharing your outlook for the second half of the year. Always really great to talk to you.
Likewise, Michael. Thanks for having me again.
We've been speaking with Feneck Consulting Group President John Feneck, and you've been watching Global One Media's Stocks to Watch. I'm Michael Swido.